Oh, is that who we keep hearing is people?
Is it Cameron?
I think it is.
And what about,
You guys put that on mute?
I might not have heard you. There you go.
so how many people do we have that are remote?
I don't know how many's on there. Mm-mm.
Okay.
I know Jeannie and Cameron's on there, and
I
then
just
their
was
people.
wondering how many of the, or like how much experience they have.
Oh, just ask. You can ask them. Go
Okay,
ahead.
so for the people who are remote, have you all done this before?
It's on mute.
No, it's on the other
Please
side.
let
The
me
other
know.
side.
It's on the mute on the other side.
Well, they can unmute to
Yeah,
answer.
can
I'm
unmute.
one returning preparer here.
One
That's Jeannie.
returning?
Yeah, that's Jeannie.
So everyone else is new or?
Cameron, how many people do you have that prepared taxes last year?
These are returning.
Everyone's returning?
I think all of these are returning.
Hello?
Hello,
Who is this?
Lindsay from Woodstock office.
Oh, hi, Lindsay. How are you? This is Gail. We were just asking Cameron if the people that are there today, if they prepared taxes last year.
Yeah.
Okay, is there anybody new there in Woodstock that's going to be preparing taxes this year?
Yes, they all are here. No, nobody is new.
All right, good deal. Okay.
So did they say nobody's new?
No, in Woodstock, no, but we've got, I think, hey, Jeannie, do you have one that's new with you?
I'm sure with it, yeah.
Okay. All right, well, we have Anna Bondi here. She's going to be teaching you today. Yay!
Great, okay, awesome, thanks everyone for coming. So this is our 2019 VITA training, this is for 2018 returns. So just a little bit about me. I have my bachelor's in accounting from Emory and Henry College in Emory, Virginia, and I'm currently completing my master's of accounting at Virginia Tech. This would be my third season doing taxes. So I've done it a few times, and basically this is the overview for what we're going to be going over. First, we're just going to do some basic VITA procedures and requirements. Most of you are returning, so this is going to be a review for a lot of you, so I apologize if it seems sort of like, you know, repetitive, but for the people who are new, it'll be really good, and it's a good reminder, because I know I kind of had to relearn everything when I was putting this together. Then we'll just go through some tax basics, just like how, what you're gonna see with these taxes, particularly the type of clients we're gonna have and what you see the most with them is kind of what I put in here. That's the scope of the basics. Then we're going to go into the Affordable Care Act, because I know that a lot of us have run into a lot of issues with that over the past few years. So we'll go into what the changes are for 2018 and how to handle that in tax layer when someone doesn't have coverage or you want to try to get them an affordability exemption. We're going to do a deep dive on that. So we'll spend a lot of time on that, and then we'll go over some of the changes to the tax code for 2018 returns. I didn't do every change because obviously for a lot of the changes are for much higher earning taxpayers, so they're not really going to affect us. So I just did what I think would probably be the most that you would run into. So yeah, so I guess we'll just get into it. Once again, this is going to be a review, intake, interview, quad review for golden rules. Using the intake form, if you all remember what that looks like, it's that long colored form, 13614C, something like that. Talk to the taxpayer, know what you're doing, have everything double checked. So the questions on the intake form are specific so that anything that's important that they think that the taxpayer would need you to know, but they might not know to bring it up to you, the questions are worded so that they might mark something, and then that will set off a flag for you and you'll look into it, and that way everything gets covered. So the intake form is really important Then once you get their intake form, you're gonna double check everything on there with them. So if there's anything that they didn't check off or that they put unsure, you're gonna ask them about that. And then if you see a yes or no to a question, that seems like that might be something important, you would wanna discuss that with the taxpayer. And then, so know what you're doing, have everything double checked. Those are just kind of for that portion, what's important. So, of course, all volunteers must pass the 10-question IRS Volunteer Standards of Conduct. If you've done it as many times as I know most of you have, you can pretty much click through that. You don't even need to review. And then, of course, tax preparers may only prepare returns for the competency level that they've passed. And the site coordinators will make sure that you're getting someone that fits within your competency level, whether it's basic, advanced, HSA, military. If you end up with someone who the intake form shows that they need an advanced preparer and you just have basic, you need to go get one of the site coordinators and let them know and put them with someone else. You should never do a return for someone if you don't have the competency level for that. So yeah, it's important that you let them know. So yeah, do your own, and use your resources, ask for help, never do something if you are unsure of something, you can always ask one of the site coordinators or one of your fellow tax preparers. Never feel like you have to just take a shot in the dark on anything. So, quality site requirements. The first, obviously, annual certification. So the quality site requirements are mostly for the site coordinators, but a few of them apply to the volunteers, and that's the one that I'm gonna go over. Annual certification is obviously really important. Every year we get certified, pass the competency test annually at every level. Intake and interview, we went over that. You have to do that before you start on a return. You can never just have the person sit down and go without looking at the intake form and everything. 13614C. And then the third one that we run into a lot is confirming photo identification and, like if they have a TIN and all of that, because a lot of times people will come in without their photo IDs, but you always need a photo ID for anyone that's filing a return and married filing jointly. You need it for both spouses. You need a social security card for everyone on the return, including the children, but obviously you don't necessarily need a photo ID for children. And this is really important because people will often come in without these documents. So if you have a family of 5 with 3 children, you're going to need 7 forms of ID. You would need 5 social security cards and then 2 IDs for the parents. And I'm going to go into that a little more in a second. Okay, and then the one that this is the last of the quality site things, and it's privacy. So just a quick reminder that anything that a client shares with you is completely confidential. So we live in a very small town, so you're going to know people, and just anything that you find out or get into with someone, that's confidential, just like as if you were a lawyer or a doctor or anything like that. So that's just important to always remember. Okay, we'll real quick go over the volunteer standards of conduct. So you got to follow the 10 quality site requirements. This is another one, do not accept payment. The first time I saw this, I thought that was funny. I didn't think, but I have been offered money on multiple occasions, and they're very adamant about it. So you just need to tell them that it's that you can't do that, legally. You cannot. So you might run into that where they try to pay you. And they mean well, but you just need to explain that, that's why we do this, so that people don't have to pay for getting their taxes done. So it would defeat the purpose to accept it. So this is another one, do not solicit business from taxpayers. So if you find out that someone doesn't have health insurance coverage and your spouse sells health insurance, you might give them their card or something like that. You can't do anything like that. You can't use their information to benefit yourself or anyone else you know. You just have to keep it you're just there to help them with their tax return and nothing else. So, do not knowingly prepare false tax returns. I run into that a lot too. They'll go, well, can you just pretend I didn't tell you that? And obviously no, I can't. Try again. So. That will happen a lot where they'll want, but you just have to, we're required as VITA volunteers to follow these rules, and you can be penalized if you don't. So we want to keep everything honest and above board. Do not engage in criminal conduct. I think that's pretty self-explanatory. Let me know if you have any questions about that. And treat all taxpayers in professional, courteous, and respectful manner. I find that most of the clients who come in, we rarely have any problems. Maybe 1 out of every 20 or 30 might have an issue that they get upset about. But for the most part, everyone's really happy that we're there and happy with what we're doing, so you should be good. I put some questions in. So, true or false, VITA volunteers are allowed to receive monetary donations from taxpayers. Yay! Great job, guys. And then, how many different levels of certification are there?
Four.
And how do you determine what level of certification a return requires? From the intake form. Cool. And speaking of the intake form, we'll just take a look at it. So if you've never seen it before, here's the intake form. You'll get familiar with it, so don't worry, you'll have plenty of time. And so it's designed, I mentioned it before, it's designed to capture the most important information. Updated annually, and it definitely helps us avoid errors and oversights. So do not prepare a return for someone that has not filled out this form. I find that our site coordinators are really good about not bringing anyone back to you that hasn't filled this out, but it can happen. And also people will just come in and seat themselves in front of you. So if they don't have that form, you know that they need to go back and they need to fill that out. So never do that. And so when you're looking at the intake form, of course, you're going to want to follow up on anything that seems unclear or unsure. They mentioned that it's good so you can write on the intake form. So if they can't answer a question, you might want to put a note on there of why they can't answer it, or kind of what the issues are, just to have some documentation of that. So, and every question must be answered. We kind of went over that. So, valid forms of ID. A lot of times we run into ID issues. So, any government issued photo ID is acceptable: passport, state ID card, driver's license. And I kind of mentioned that earlier. Social security card is a little different. There's a few things you can use. So. The phrase they have for VITA is, if there's no social, there's no service, which we definitely run into that. So these are acceptable forms of Social Security. You can do a photocopy of a Social Security card, because you'll get a lot of clients complaining that they don't want to bring their actual Social Security card in, and you can use a photocopy. So that is not a valid reason not to have it anymore. And you can use the Form 1099 SSA. Anything that is from the Social Security Administration you can use as a form of Social Security. And Medicare cards. So they actually changed it. Medicare cards will not have the Social Security on it anymore going forward, but if you have an old one, like the one there, you can use that. So, okay. True. You can use a photocopy. I loved that. I don't think I knew that. Or I might have done that. I don't know.
We used to not be able to.
Really? Okay, then yeah, I think that's why I was like, oh,
Yeah.
cool. Because people get so worked up about that. But, so I'm just gonna go over some really basic tax stuff. I know this is gonna be
The
kind of boring
conference
for
has
a
been
lot of people.
unmuted.
So filing statuses, of course, single, head of household, married filing jointly, separately, qualifying, whatever. We'll go through them. So single, unmarried on the last day of the calendar year, so they can have been married the whole year until the very last day, and then they can file single. Unmarried means they've either never been married, they're divorced, they're legally separated, or they're widowed. So legally separated, I didn't realize you could, I thought maybe you would have to do married filing separately, but if they are legally separated, you can file single, so that's a good thing to know.
Isn't it legally separated, you need to be 6 months?
I believe so. I mean, I would require some documentation, I would say. If they're telling me they're legally separated, I'd be like, well, let me see that. You can go either word. divorce, but 6 months not living together.
Either that or court-ordered,
Or
separation document, that's what I thought, so.
Yeah,
And that's
yeah.
what, we researched that last year, unless it
Yeah.
changed this year.
Yeah, so I guess you have to be separated 6 months before you can get the divorce, right? So the divorce would be
Yeah,
a
it's
process.
something like that.
Or
So
you have to
that's-
have a legal document saying, from the court saying that.
Yeah, and they can't, so definitely, if they're legally separated but they're still living together, I would question doing single, for sure. I would probably make them,
What if they've been separated for years, but, they don't even know where their spouse is?
we run into that a lot, I'll get into that,
Yeah.
because I've had that happen to me last year.
But even illegally separated, they can be legally separated and live in the same address.
And I actually think, and we'll look at the married filing separately requirements, I actually think that if they were living together, that would not, they would have to file as married, even if they're legally separated, if they're still living together. I think
I
it's,
meant the same address, if they have the same address, because what I've noticed is that they separated, but the mail still goes to the old address,
yeah,
so.
well, I guess you would just go by their word on that. If they say like, oh, my mail goes there, but we don't live
Yeah.
together, then I would take their word for that, but we'll get into that more, because married filing separately, is interesting. So head of household, last day of the calendar year, they're unmarried, legally separated once again. Divorced, so if married, and they did not live with their spouse for the last 6 months of the year, and they meet the other two criteria, they could file as head of household. So that's a nice benefit that people are gonna wanna take advantage of, for sure. So I guess that answers that question. So if they're legally separated and they haven't lived, well, no. Yeah, if they're legally separated, but they haven't
Yeah,
lived
live
with each
6
other for 6 months. So yeah, that's kind of what I was thinking. Housing, paid the cost of keeping up a home for the year, majority of costs over half, and then lived in the person's. So they have to have a qualifying person live in their home to claim head of household. So that's a qualifying relative or child, and they have to have lived in there for 183 days for this. So you cannot be the head of your own household if it's just you. All right, so married filing jointly. So, one of the spouses dies during the year, the widower can still file a joint tax return for that year as married filing jointly. In certain circumstances, they can actually file a joint return if the spouse passes after the end of the calendar year, so you would wanna look into that as well. And then married filing separately, married couples. So most of you probably know that married filing separately, I've never seen a situation where this made sense. I've had people think that it made sense due to like certain like student loan issues, but it ends up not working out for them because they miss out on so many credits, earned income credit, no education credits, no student loan interest deduction. You can't exclude interest income on US savings bonds. So there's a million reasons not to file separate. But occasionally, there have been people who it makes sense for them to file separately depending on their income. I've yet to, has anyone ever seen that, where that made sense? Not really.
Every once in a while, somebody will insist that's the way
Some
they
people
want to do
insist,
it, but-
and then you're like, okay, well, there's just all these things you can't take advantage of. And it's a higher tax rate, which is crazy.
One of the big ones missing there is social security. If you're on social security and file
Mhm.
separately, then you don't get that big deduction.
It's what, 85% of it is taxable if you file, married filing separate.
That's weird, they didn't mention that.
Yeah.
So I don't know, maybe
Or
that
if it's
changed.
this year.
You know, it's always been that way.
Yeah.
So,
Anybody that's on social security wants to think twice when married filing separate.
But in Social Security, if you're single, it's 25 to 34,
Yeah.
whereas if you're married, it's 34 to 44. So sometimes,
32,000.
yeah, sometimes maybe it's better to file single because you get that higher bandwidth to offset your Social Security.
Say that again now.
if I remember the numbers right, I mean, if you're married filing jointly, based whether your social security income is taxed or not, I think it's 32 to 44. So if it's within that bandwidth, it's 50%, then it's more than that, 85%, blah, blah. But if you're single, if I remember the numbers, I think it's 25 to 34. So if you're married filing separately, I mean, depending on the, you know, where you are, you could offset that to some degree.
So you might wanna do it both
Yeah.
ways to see.
But if you're married, you're filing separate, you lose that $25,000 and that $32,000, it's all gonna be taxed, your social, or up to 85%.
Oh, okay, the
You know what I'm
exclusion,
saying?
the social security exclusion. is what I'm saying.
Exclusion goes away, you're saying.
Okay,
Yeah.
okay, it's not, okay,
Am I talking?
I see what you're saying.
Okay.
Yes, no, that makes sense, so it can be between 25,000 and 34,000 depending on your filing status, and, yeah, so if it's more than 34,000, up to 85% of your benefits can be taxable, but you lose that exclusion if you're married filing separately, as far as we know. They didn't mention it when I was going through the module,
See, I wasn't even
but,
thinking about your
Yeah.
figures, I'm just thinking, you're losing 25,000 or the 32,000, married filing joint. And it goes back to zeros or exclusion for social security.
yeah, so, okay. Does that make sense to everyone? Yeah, easy?
I tell you,
Um,
a funny one on that, I had an old man once, and he had to file separately, and I said, can't you talk your wife into it because of his social security?
Right.
He says, no, she blacked my eye. I said, well, then I guess leave that one alone.
Because it's not worth it. So, cool. So also, does anyone have any questions? I feel like I've been kind
Can we get a, you know, email this presentation?
yeah,
Okay,
yeah.
so
It's just, yeah, I'll definitely,
it's a good summary, you know, it doesn't have.
I emailed it to Jan, yeah. So, okay. I'm just looking real quick at this, if they are married filing separately, live with their spouse, they get zero exclusion. That is still correct for 2018. That's weird that they didn't include that, in the module, but I'm glad that you mentioned it, so. Because we have a lot of clients that get social security, you're gonna see it all the time. And I'll show you the form later on in the presentation, but you'll definitely see that. Qualifying widower, so you can file as widower for 2 years, if you have a qualifying child. So, must be child, stepchild, that lives with the taxpayer, and they can't have gross income over $4,050. And the widower must have paid half the cost of keeping up the home, so kind of like head of household rules, but obviously it's, you know, the spouse has passed away in the last 2 years, they can file qualifying widower. And it's the same rates as married filing jointly typically.
Yes.
Janet, on that, so if a person's spouse died in 18, then they can file qualifying for the next 2 years, right? So 19 and 20.
Yeah,
Because that first year, they can still file married filing.
yeah.
Yeah.
You're saying you could, the first year you can file married, file jointly,
Yeah.
and next 2 years you can
2
do
years.
qualified widow?
Yeah, as long as they have a child, a dependent
Yeah.
child.
So yeah, you have to have a qualifying child, not just a dependent. So. Okay, so this is, I don't even remember the answer to this one. No, I do. Does anyone know what 3 tests you have to pass in order to meet the head of household?
I'm married, qualifying child, somebody else now.
Yeah, no, that's good. So marital status, qualifying person in the housing.
And they have
Providing.
to pay over 50% of
Yeah.
the upkeep of the house.
Yep.
Housing.
So, what is a dependent? You're gonna have this a lot, because we get a lot of clients that have different living situations, different people living with them, so who is a dependent? So a person other than the taxpayer who qualifies as taxpayer for dependency. So for 2018, this is one of the big changes, there's no dependency exemption. For those of you who've done taxes before, you remember you would total up the dependencies and put it in a little box, and then on the back of the 1040, you would multiply that by the personal exemption amount and take that as a deduction from AGI. We're not doing that anymore. But there's other ways that people can get benefits for having dependents, which we'll go into. So a dependent can either be a qualifying child or a qualifying relative, and qualifying relative is actually deceptive, you don't have to be related, but there are certain criteria you have to meet, so. We'll go over qualifying child, there's 5 things you have to meet, relationship, these are the relationships you need for a qualifying child. It can be a sibling, it can be a grandchild, it can be a descendant of any of your son, daughter, stepchild, foster child, siblings. So, that covers quite a bit. Age, they must be under the age of 19 at the end of the year, or a full-time student under the age of 24. So a lot of people are in that situation where they have a child out of the house, but they're under 24 and they need to be enrolled in school full-time. That's really important. They must have lived with you for more than half the year, 183 days. If they are a student, that is considered a temporary absence, and so they still meet this residency requirement if they're away at school. Support, child cannot provide more than half of their own support throughout the year. And the child cannot file a joint return, which I thought this was interesting, but basically, if they're, married and their husband's in the military or something, and they're living with you and you're providing half their support, but they decide to file with their spouse, then you cannot claim them as a qualifying child. So, and then qualifying relative, they have to not be a qualifying child. Member of household, so the person has to live with you all year or be a relative, and they cannot have been your spouse any time of the year. And what this means, you'll see, is if they're a relative and you provide more than half of their support, then you can claim them, even if they don't live with you all year. So I'll get into that more if that makes sense, so.
Let's back up for just a second.
Yeah.
When you were talking about if you can't have a joint return with a child, we did have a client that came in last year and somebody prepared his and his mother's return jointly, and we had to redo it, so.
Jointly, like they were married?
Yep.
Oh my God.
I think you told me that we redid it, and then they got audited.
Yeah.
You did not put up a flag?
Yeah.
Go figure.
We
Yeah,
went to the systems.
she still hasn't gotten her refund.
One of the volunteers filed it wrong the first time?
2 separate W-2s.
Huh.
They put in the same thing and ran it through, it went through.
Well, that's just one of those, whoops.
So yeah, if they were a dependent, yeah, they would have to file their own W-2 with those, or their own return with W-2.
He was a student, she
Mother
could
and
have
son?
claimed him,
Yeah.
but he needed to do his own return so he could get all his money back.
Right. Okay, yeah, don't do that. They have to be married for them to file jointly. That's why it's married filing jointly. So that's a good
Can I
reminder.
just clarify something real quickly? I think I heard this correctly. For qualifying child, they must have lived with the taxpayer for more than half the year, but to be a qualifying relative, it has to be the entire year?
Yes.
Okay.
Because, yeah, I think that's important just because it's more like general. Usually these are people who are just sort of like living off of
Yeah,
you.
well, one variation, if you're a student, you don't have to live,
Right.
with the.
I just realized I wrote it that way. A person must either live with you all year.
Or be a relative.
I feel like if I put it like that, that means that's what it is, but
Now, qualifying child, you have to be related. A
Yes.
Qualifying,
relative, you do not have to be
Right.
related, you just
You don't
have to live with them all year. And then if you are related, they don't have to live with you if you're providing more than half their support.
so
So
if you gotta live in boyfriend, girlfriend, whatever.
you can claim
they live
them
with you all year.
if they made less than $4,000 that year.
Like if your cousin is living with you and they only live there half the year, you can claim them.
No, no.
No.
If your
Well,
cousin-
if you're providing more than half their support, then
support.
yes,
Okay, so if they are actually related to you,
yes.
they don't have to be there the entire year.
Or be a relative.
Or
Yeah.
a relative, okay.
Does that
Sometimes
include
we
a,
get confused.
does that include a child that graduated college, still lives with you?
Yes, but you can't, they're not a qualifying child, they're a
Right.
qualifying relative.
They're
at this
qualifying
point, Because they're
relatives.
probably, if they're graduated college, they're probably over 24 and they're not a
Yes.
full-time student. So
Right.
yeah, but if you're providing more than half their support, and even if they don't live with you and you're providing more than half their support, you
Mm-hmm.
can claim them as a dependent.
So they have to be
Isn't
under
that
24?
Just a parent? I mean,
What do you mean?
you can